Hi there, Stanton here from Algotrading. Today we are going to be talking about risk and reward with regards to trading, live trading, or using a MT5 EA. This is a very important video, so watch till the end. Make sure you understand this, because if you are going to be using Algotrading going forward, you need to understand the risk-reward ratios. Okay, so let's get started. We are going to I'm going to run a few back tests on my Multifarious BYBIT EA. Again, if you want to buy this EA with full source code, you could go to my website, or if you use my registration link below to register with BYBIT, deposit $100 and send me your UID. I will send you all of my BYBIT EAs absolutely free. Okay, so the first scenario what we're going to test is exactly what I've shown on my Twitter, on my Telegram, on all the results. Is I'm going to be depositing $100, and I'm going to be using my BYBIT Multifarious V4 set, which is the one I've been running live. Okay, as you can see here, we are taking potentially max 3 buys and 3 sells so what that is saying is that at any point in time there can be 3 buys and 3 sells open, and we are risking 10% of our equity per trade. So, well, let me show you the results and then I'll show you the problem with that. So I'm going to run this back test. Let's just look at the graph. Shows massive profits. Okay, so the main important thing to remember is that just with any sort of investment or trading, the higher the reward, the higher the risk. And you need to understand that concept. So low risk, low reward. High risk, high reward. Same concept that applies to any sort of trading or investing. Now if we look at the back test, you see we deposit $100. Our net profit was 39 million. Our balance drawdown maximum was 3.75 and 3.8, which is extremely good. But if you looked at our relative drawdown, you could see at some point we were down 68% on our balance and 72% on our equity. Now that is extremely high risk. So if the market condition or whatever caused this to be down 68%, if that happened twice in a row, you would be wiped out. So you need to understand that risk, that if you're risking $100 to try and make 39 million, there's a very high chance of getting wiped out. So now let's try reduce the risk to see what sort of changes we can make. So I'm still going to deposit $100. I'm going to take the risk to the lowest possibly that I can. So I'm going to have 1 buy at a time, 1 sell at a time, and then I'm only going to risk 1% of my free margin. Now I'm going to start this back test. And if we look here, we started with 100. We made $3,137, which is still a 3,000% in 2 years, which is extremely good return. And you can look at our drawdowns. So at some point we were only 13% down or 16% down on our equity, which is far less risk than the 68% that you saw in the previous test. But also you could say, like, this is still fairly high for only risking 1% of my equity. Like, why is that still so high? And let me show you why. If you look at our deals, due to the the minimum lot value. So trading Bitcoin on BYBIT, the minimum lot that you can bet or use is 0.01. You cannot get lower than that. So if you look at our first loss, so we had $107 in that stage. If you look at our first loss, it was almost $8. That is almost 7.5%, 8% of our equity in the loss that we're taking. And that is due to the minimum volume or the minimum lot. We cannot get lower than this. So we cannot actually risk 1% of $100 is because we cannot get lower in the amount of volume that we are actually betting or using. So that still is quite a high risk then, because even though you said 1%, you are now losing 7% of your equity. And not until you get to, I think it's about $1,000. Let's just go until we see. So not until you get to about $700, $800 in profit are you risking actual 1% of your equity. But once we get to about $700, here we go. That's still a little bit more. That's about 1.5% of your equity. So you'll see once we start a volume increase to 0.02, only then are we actually risking 1% of our equity. Until then, it is using the lowest volume that it can do in order to try and get to that 1%, but it cannot make the volume any lower. And this algo, the way it works is that if it tries to use a volume that's lower than the minimum volume, it will always use the minimum volume. So when we get to about $600, $700, only then do we start risking actually 1% of our equity. So that is the caveat when actually only putting in $100 and saying, well, I'm only going to risk 1%, because you can't risk 1% of your equity because the lot size doesn't go that low. So that is the caveat with having a small account and trying to take minimal risk. It's actually very difficult on deposit only $100 to take a minimal amount of risk. So you can see, now this is only 1% of our equity, and then you'll see from about here it will start changing to 0.02, because we can increase the lot size because the minimum, so it's about 1.2 million. 1,200 does it actually start increasing the lot size. And then we're risking slightly more than 1% of the equity. So that is the caveat when having a small account and using the algo and trying to risk 1%, but you actually can't risk 1% because you actually don't have enough capital in your account to risk 1%. So now there's an even safer method, is that if you deposit $1,000, and if you look at this backtest, if you remember this backtest, our drawdown was 13%, and we made 3,000%. But the safer way of doing this is actually depositing more, $1,000, risking 1%, and only doing one trade and one buy and one sell position. And if we look at our graph, very neat, clean. So in this case, we're risking $1,000, making $8,000 over 2 years, which is 8%, which is not great for a crypto trade. Look, it's 800%, but still, not great for, in terms of crypto, what you can earn. But your risk is only 7.9, and all of these match up. So your maximal drawdown and your relative drawdown is exactly the same. And that is what you want to look for when you want to find an extremely safe algo to run. If you want it to something that you want to set and forget, you need to look for these sort of figures. And that is it. I hope you guys enjoyed the show. Please remember, with high reward comes high risk, and do your back tests. Play with the configurations, especially on the multifarious itself. Play with the configurations, and see what type of risk is acceptable for you. So, hope you enjoyed the show. Hope to see you guys soon. Like, subscribe, check the links below, and cheers.